Good day. My name is Terry Holohan. I'm the Chief Executive Officer of Resolute Mining. I've been in this position 2 years, but I've been with the company 3 years now. The company is a gold mining company. We are presently operating 2 mines, but 3 exploration plays in West Africa. We're expecting to produce about 350,000 ounces of gold this year, and our costs, we believe, are going to be somewhere between $1,300 and $1,400 an ounce.
Terry, good to meet you. We're in London, so everyone knows we're in London.
Yeah.
We spoke to the company with your predecessor in place, 2019. So we know a little bit about the backdrop then. But at that time, experiencing some issues with roasters, etc., and a kind of new team, including yourself, came in to sort out a few issues. Can you tell us or explain to us what you walked into? What was the challenge to you from the board?
Certainly. I think the big issue was the technical issues that they were experiencing both underground and in the surface plant of the sulphide operation. Just before COVID, they made a big decision to go from an open pit operation to an underground operation. It's a sub-level cave, relatively new for Africa, and they're putting more pressure on the sulphide plant. They also went through a bit of an automation phase on the underground, which didn't work too successfully. So I got into a situation where the mining was struggling. We weren't quite getting the grades or the tons, and we were using a mining contractor. And we had a plant that was dysfunctional. It only had an 80% availability. Mm-hmm. So what I had to do was bring in some technical experts that understood those issues and rebuild the plant, rejig the mine a little bit, get it back on track, and really go back to one-on-one basics on both mining and processing.
Right. We better than dig into your background and in fact, the team that you brought in. So turnaround experts, would that be fair to say?
Correct, yes.
Right. Okay. So tell us a bit about you and your background.
My background, I started out in the 80s working in the platinum industry. That was a booming industry for 20 plus years. So I spent 25 years there. And because it was in a growth phase, I was continually building and optimizing operations on the ground. I'm a metallurgist by background. And then what would tend to happen is you might have to go back in 4 or 5 years' time to an operation. Maybe they went off track a little bit, so we had to get them back on track, back to basics, get back to tons, grades, recoveries, get the cost back down. So within the platinum industry, I got a bit of a reputation as a turnaround person, someone that could fix problem areas, be it technical or even people related.
Right. Okay. So let's talk about some of the lessons you've learned over the years at various plants, etc., in terms of this turnaround stuff, and what you're able to kind of bring to the team, bring to the table here. So you brought the team in. What did you ask them to do? What were they looking at?
Well, I brought 5 people in that I'd used on several other projects in the past.
Yeah.
I knew what they could do. It was a case of, are you available now? I managed to get 6 people out of like the 20 that I called on. We got them in and they got back into the operation. They spent a lot of time in the operation with the people, showing them and coaching them on how these operations should be run properly.
Right. I always say to investors, you got to look at the design of these plants and all the equipment that you're looking to bring in. And you mentioned one other thing: automation was quite a buzzword back then. I think it was the beginning of the whole battery revolution that we like to talk about. But saying it and doing it, 2 different things. So in terms of
correct,
how far back did you have to go in terms of let's get back to basics?
Well, fortunately, just as I'd arrived, they'd realised the automation didn't work, so we were starting to scrap it.
And what was wrong with it?
Essentially, we had an underground mine which is relatively new and it wasn't designed for automation.
Okay.
So if you're going to automate an existing or pre-designed mine that's designed for a manual operation rather than automated operation, you have to invest in the underground structure and the infrastructure. And that wasn't done. So it made it a little bit tougher. And so it didn't work efficiently. And then what tended to happen with the automation, the idea was that the material coming from underground would go straight into the plant. Yeah. Given it's a sulphide ore body, that had a big impact on the pyrometallurgical step in the middle of the plant, which relies on a constant sulfur content. if you get a varying sulfur content, then you're going to get a differing heat energy.
Yeah.
So that you get far wider temperature fluctuations within an hour, and then you start expanding and contracting your pieces of equipment.
Right.
Now, no piece of equipment likes to expand and contract.
Yep.
It likes steady state. So it started to break loose of its bindings and have fatigue failures. So we had to essentially rebuild the plant over a quarter.
Back to basics and joined up thinking required. I always think people in your position or your team's position, you kind of got a free pass for a while, right? We didn't cause this, but we know what's wrong. We know how to fix it. Give us time to fix it. How much time do you think the market gave you? Because it was kind of a strange period. It was COVID period as well.
It was right at the end of COVID.
Right.
And, when I came in, I said to the board, and I hadn't been to site, again, because of COVID, but I knew the project reasonably well.
Yeah.
Syama's been around for 30 years, so I knew what could have been the technical issues. I had talked to a few people that had worked there before, so they could allude to a few of the issues. And I said to the board that I think this is going to be a 3-year process based on what I'd heard.
When 3 years now, are we?
We are 2 weeks away from 3 years.
Right, okay. So we're about to hear whether you're right or not. Okay.
And I said that the first 2 years we really have to focus on the revenue side of the equation, which is the tons, the grade, the recovery.
Right.
And then halfway through the 3 years, then you really start focusing on cost. By the end of 2 years, you should start seeing the production where it should be in terms of design.
Right.
And maybe a little bit more if you can enhance the project when you rebuild it.
Yeah.
And then in the last year where we just about completed, the cost will start coming down and back where they should be.
Talk to me about the order of play there, because it's kind of interesting. People automatically assume cut cost bursts, right, and the rest will take care of itself. But you're saying actually no, we need the grain, the tons, the grade, and the throughput.
Recovery.
Yeah. Right. Then the cost.
See, the costs were out of line. They're in the fourth quartile, but they weren't
pretty punchy.
They weren't $1,900 an ounce. They were $1,500.
Yeah,
we know they should have been $1,300.
Right.
So we could live with that a little bit. You were putting cost initiatives in place, but not focusing heavily on it. You wouldn't sort of say, right, we've got 150 expats, let's reduce it down to 10.
Right.
You have to do that systematically over time. And you don't want to do any major changes, which would be shocks to the system.
Yeah. Yeah.
Because if you lose people, you lose a bit of the knowledge. You need to sort of coach them into training the people below them before they lead them. So it tends to be a process which takes time.
Right. I think obviously during this period as well, and we've heard this from numerous CEOs of producers out there, they're saying, obviously the rising cost environment during that time in terms of your supply chain issues and people issues and all those, movement of people even. It was difficult. It really started ratcheting up the costs, and a lot of economic studies got blown out of the water.
Yes.
40% change from PFS to feasibility study. So it was a sort of slightly alarming time as well. And yet you were going in there to say, well, actually, I've also got to try and increase our margins. I've got to drive our costs down. I've got to increase our throughput, recoveries, all of that sort of thing. That must have added a little bit of stress.
It did. I mean, when the Ukraine war started, the whole gold curve stepped up 10% overnight. It was simple. And then a lot of us realized where a lot of our supply of resources came from, raw materials, etc. Chemicals.
Yeah.
So we had to resource them. We had shipping issues because of the back end of COVID. So there's a lot of issues. But I think the key issue there is to get everybody involved. We had a lot of people on site, a lot of people who were very good technically. They just needed the guidance and assistance to focus on the priorities. And you have to review those priorities almost on occasion on a daily basis.
See, I mean, the amount of people that you're managing as well, it should not be underestimated. There's a great company called G Mining Ventures, and they have 1,800 people, and the CEO says, we know what everyone's doing on an hour-by-hour basis. So in terms of process, which this is quite extraordinary. But for you guys, in terms of implementing new systems and that sort of change your regime, optimizing things, and obviously end goals, working towards that same goal, how do you do that?
Communication and coaching. You've got to be present. I mean, the first year of the operation, I was actually when I was Chief Operating Officer, I was on site 50% of my time
Right.
a year.
Okay.
You've got to be there, you've got to be visible, but you've got to roll your sleeves up and get your fingernails dirty. You can't sit back and conduct.
Okay.
You've really got to get involved and show and demonstrate to people how to do things.
Right.
You have to engage with the groups, you have to engage with the unions or people representatives so they understand where you're going and share the vision of where you think you're going in 3 years' time.
Right, so that's got to kind of cascade down through the organisation.
Correct.
And people need to buy into it without getting disheartened or leave.
That's right.
Nothing worse. Okay, so we understand, what you've had to do. Where would you say you are today? You've talked about guidance being pretty hefty in a high-price gold environment. I see that you've got cash on the balance sheet now, which is quite nice. Finally. Thank you, gold price. But also thank you, 3 years worth of hard work. How much more of that do you need to do? How much shoring up of the balance sheet do you need to do?
Well, the balance sheet we're comfortable with now. We've got no debt on it for the first time, except for overdraft facilities in country. We do have net cash in the system.
Yeah.
That started coming through in December last year, which was slightly ahead of my original schedule. I was pleased about that, but the gold price has helped a little bit there. But if you look at it, 18 months ago, we could see where it was going. We could see where it was turning. We could see that our production was improving. Our productivities were improving. We had to spend a lot of time and money on overhauling equipment, fixing equipment, improving productivity. So we immediately started drilling again, because we could see that the long-term answer specifically for Syama is growth, organic growth. So over the last 3 years, at the same time, we started out with 7 million ounces in the ground. We're producing at 200 a year at Syama, or just a little bit above. We're now at 10 million ounces. There's a lot of metal in the ground. So we've ticked the box on sulphide processing and mining.
Right.
Now we've actually ticked the boxes a lot more there. We've actually gone ahead with an investment, just to make a small investment to expand the operation from 200 to 230 plus thousand ounces. That has already started as a capital project that's due to be commissioned in the middle of next year, and that will bring our unit cost down yet again. So we're starting to creep towards the middle of the cost curve. I'm not going to say when we're going to get to that middle point, but we will in the near future. What we also did in terms of the balance sheet, we had to do an equity raise, which is not good for the existing shareholders. We understood all that, but we were in a lot of pain at the time. We did that raise. We brought in a lot of fund managers in from North America, and they really bought into the idea that we've got a growing asset here. 10 million ounces was on the cards at that point, producing at 200,000. There's a tier 1 mine here. Now we've ticked all the technical boxes. So over the next 5 years, everybody internally and with the fund managers and the shareholders, we all know that there's a tier 1 mine in the making over the next 5 years.
So tier 1 is like what, 500,000 ounce? Plus?
500,000 ounce sort of size,
Right, okay.
May come in initially at 400, but if we keep going finding metal, and I'm sure we will, we've got 85 kilometers of strike. It's maybe 20% explored. We've never really focused hard on the sulphides because we didn't think we could process them properly. So we hunted around for oxides, but then we've been mining oxides for 30 years. So there's not a lot left to find, we don't think.
Right, so that's the shallow, cheaper, is heap leach?
Yes. It's all tank leaching.
Right, okay. So your job now is obviously increase that margin. It's always about margin, whatever your business is.
It's now all about margin.
Right, and increasing the ounces available to you and working towards that proper tier 1, such an overused phrase. So this genuine tier 1 opportunity ahead of you. Can we look at the allocation of the cash that you're starting to build up, right?
Yes.
Because what big companies are very good at doing is producing lots of uneconomic ounces or taking the money that they make and plowing it back in the ground. And what I, as an investor, want to try and understand from CEOs and companies is, how do you drive that share price up? What's going to be important for the company, either in terms of setting it up for some kind of exit event or dividends or all those wonderful, and ideally, some accretive growth on the share price. What are your plans?
It's all about margin.
Right. Okay.
Simple. And if you look at it, at Syama, all of our ore in the ground is at 2 to 2.5, some 3, some 4 gram a ton material.
Yeah.
Some's more difficult than others. So you've really got to find which one do you mine first? What's the best margin? What's the best return? And it's all quarterly runs on the board and telling people what you're going to do and achieving that. I mean, we've had about 11 quarters now of really good production, improving costs systematically.
Yeah.
It's all about performance.
Yeah, I mean, I hear what you're saying, and I've looked at it as an Australian company called Westgold, and they're very new CEO. Wayne came in a couple of years ago, and he basically said, look, it's great producing lots of ounces, but they're not economic. Let's focus on economics, please. And you're now, it seems, at that inflection point where you're ready to kind of step up and sort of, I keep talking about margin, but I think it's so important. Most companies forget about that. Where you can take advantage of gold price, increased ounces, better efficient engineering, and something that meets your designs. But how do you continue to sort of drive that growth story once you start getting bigger and bigger? Because it gets harder, right? So
your first step on a turnaround is organic growth. We think we're blessed there because we've done a lot of drilling and we're continuing drilling and we're finding more.
What's the budget for exploration?
Across the company, it's almost $20 million this year.
Will that change now that money's coming in?
I think with the present gold price, yes.
Right,
I think we'll inch it up, but we won't go crazy.
So there's this, and talk to me about the drilling, because obviously you've got potential infill drilling. You've got to build up reserves as well, right?
Yes.
Potential infill drilling, you want to go deeper into sulphides. You may want to go, greenfield. I don't know. You tell me.
Correct. But on both our operations, we've got Syama and Senegal with brownfields drilling there. We're finding metal at less than $10 an ounce on both of those. We're looking, as I say, over the last couple of years, we found 3 million ounces in the ground and good grades. It's now, we know that the underground is producing metal at around, or will be producing metal at around $1,300 an ounce down the track when everything's 100% efficient.
Yeah.
Now we've got open pit potential, which could undercut that. So now we've got a situation where we've got, okay, which deposit should we put through the mine? Is it going to be the cheapest? Do we extend the open pit? Because most of our drilling has only really been down to about 100 to 150 meters. The size of pits that we can see now could be 200 meters deep.
Right.
And then go into underground. But you've got to be very careful. You don't want to keep drilling and drill the underground now that you're only going to access in 5 years' time. Yeah. We don't want to just say, hey, now we've got 25 million ounces. It's, okay, we've got 10 million ounces and we can see a pathway to processing that over the next few years.
Right.
We're doing greenfields, as I say, at Syama. We're doing greenfields in Senegal. We're finding metal there. And then we've also got some, brownfields. I did say greenfields, it's brownfields. But we've also got some projects going in Guinea. They are greenfields, and we're very excited about Guinea because we want to diversify. We want to get into more countries, more jurisdictions. We'll have our first mineral resource out in Guinea within a couple of months now.
Okay.
So we've already found metal there in the ground.
Right, okay. Might be a nice time to talk about the West Africa. Okay, so it's going to be high on the agenda. I'm sure you asked a lot. Okay.
Yep.
So we're seeing across West Africa some political unrest, we'll call it, and people talk about Wagner Group, Africa Core, terrorism, all sorts of things thrown at miners. But they all seem to kind of get on and keep producing. So
correct.
What's actually happening on the ground? Well, forget the headlines. What's actually happening on the ground?
Where we are, if you look at Mali is like two Texases stuck together.
Yeah.
We're right in the bottom right-hand corner.
So sort of diagonal.
That's right.
Diagonally running southwest.
It's a huge country. It's a huge country.
So you're in the nice bit.
We're in the nice bit. We're right next door to Côte d'Ivoire.
Yeah.
We're looking over the fence to Côte d'Ivoire there. It's nice and quiet.
Yeah.
And we've got a community we've been working with for 30 years. There's our eyes and ears on the ground for us. They tell us what's going on. We've got great comms in the country. We know where all the activity, all the hot spots are. more up north, central, and up north in the country.
Yeah.
To us, it's business as usual.
But is it bordering Niger, sort of? Is that then in the northeast? Is that?
Yeah, northeast corner. Yeah, that's right. Northeast corner.
Yeah.
We've got
But you're
Burkina
down
Faso.
southwest.
We're down southwest at the bottom there. And it's extremely quiet. We've got decent roadways, highways, etc. We just get on with our business. We've never had any security issues on site, and we've been operating there since 2009.
Right.
We have 85 kilometers of strike. Our geologists are out in the field at all times. So we're very comfortable where we are.
Right.
But we think we've got an early warning system, that we've got a great community around us that will give us ample warning of anybody moving into the area.
So some to CEO Perseus, who's obviously got West African assets and now over in Tanzania as well. Africa, great place to do business. Maybe not for everyone's cup of tea, but you can get on and quick permits, licenses, people, skill sets, route to market. It's all kind of good stuff, right?
Yeah.
What's your end game here? Because you've come in as a turnaround expert, right?
Yes.
Your thing is fixing things up and then maybe moving on? Or is this something that you can sort of see yourself running for a bit?
I think my job's not done until I've grown this company into a more substantial company.
Okay.
And it's sustainable.
Right.
Now, what is sustainability? I think you really need, for a good gold operation, I think you need 4 to 5 mines in probably 3 to 4, maybe 5 jurisdictions.
Right.
That's lowering your risk right across the board. There are plenty of deals to be done. We do know not just West Africa. We as a team know Africa extremely well.
Yeah.
Personally, I've operated in Africa for 30 years.
Yeah.
I know a lot of the countries there. West Africa is vastly underexplored. There's a lot of gold still to be found, and you only have to go out there and see where all the artisanal miners are or have been recently to see where the stuff is.
Yeah.
They're great geochemists. And they're friendly. We work with them. We go in and ask them what they're doing. They show us what they're doing.
Right. I guess the question I'm sort of veering towards is, what's the end game here? Is it pretty yourself up for some kind of M&A activity? Well, mergers, acquisitions, they seem to conflate those words these days. And there's a lot of that going on at the moment. And there's a lot of money being created by big producers because the gold price at the moment, so a lot more spare cash. Or are you the acquisitor? Or is it, do you know what, we'll just do this the right way and we'll play it by ear?
We have to do what's right for the shareholder. They want to see long-term value and growth. If that means sell the operation to somebody, great, we'll sell it to somebody. If it's take over some smaller operations, I think what we have now as a group to offer is that we can operate in very difficult jurisdictions. We are good at underground mining, open pit mining, oxides and sulphides.
Right.
What else is there in the gold space? So I think we as a team have got a great bunch of technical expertise to offer.
Right.
Even though we've been through 5 years of pain, at the same time we've still looked at every potential project that's come down the track. We've made some offers for a few, but nobody's obviously taken us up because nobody wanted our script. Things are changing fast. Now people recognize that we've got something to offer, so people are coming to us now. So M&A activity, we'll look at it. We've publicly said we'll look at it, but very carefully. Very carefully.
Yeah, I'm so intrigued about what you think the cash balance needs to look like to do, because everyone likes to do, as you say, the script doesn't look right, the shares don't look like they're moving. Why would anyone consider that? But with the balance of cash and maybe some sort of accretive growth on the stock, you've got a better chance. Do you think you're there yet? It feels like you still kind of got another year of just, again, moving things to where you want them to be.
I'd like a little bit more cash on the balance sheet. I'm really happy with the bank situation. And I'd also like to go, we are talking to the banks again and saying, can we look at a bit of refi, just to have a line of credit if we need it. We don't need it.
Yeah.
We're doing our expansions out of free cash flow this year.
Right.
And that was based on 1850.
That's the right thing to do.
That was based on an 1850 gold price.
Yeah.
So we should end up with a little bit of extra cash anyway this year.
Do you hedge?
We've just closed our hedge book.
Right.
As we close the debt. So for the first time in 4 years, we're now at the mercy of the market.
What are the payables for you? I mean, what are you picking up per ounce?
Well, we in Q1 now, where we've just had the hedges, we were at 1950. It should have been
Right.
2050. So
Yeah.
we're actually going to see an uptick in the revenue now.
What do you think that goes to?
Is it the price now? Look, I did call the 2.3 for the first quarter this year. I think it's a spike. I think it's going to settle down a little bit. But I think 2,000 could be a new floor. However, we will always budget as if the gold price could go back to 1,500.
Yeah, for sure.
Because I've seen it too many times.
We all have. We're only 30. Just the grey hair.
That's right.
But talk to me about, payable or recoverable versus payables, and in terms of how you're going to drive in those efficiencies. I don't know what it's like and where you actually sell your gold to. I mean, where do you sell it to?
We actually refine all our gold through the Perth Mint.
Okay. Oh, right.
And it's collected from our gate, so we don't have to worry about it by the security companies. We don't worry too much about that. It just happens. Gold is a very easy business to discharge you.
It is rather.
Sell you metal.
Yeah, minute by minute price index. Yes. It's all, they've thought of it. They've thought of everything. Okay, well, Terry, man, it was good to meet you and good kind of hear about that kind of turnaround component, and it kind of bodes well for the future in terms of if things come up, you've got the team there.
We're available.
Manage it.
Yes.
And I guess there's that run up that you're taking into what the future of gold looks like. Whatever your view of price looks promising. I appreciate your time.
Thank you very much.
Cheers, Terry.